Welcome and thank you for clicking on my video. In this video, we're going to talk about two things that you can do to separate yourself from the herd. You can separate yourself from the crowd by just doing these two things, and it'll make you better than 90% of traders because they do not do this thing. So we're going to pay attention to that, and then we're going to get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta today. And let's just go right into it, first hitting those two things. Now, I just wanted to point out before we fully begin that this upward trend here is starting to go down like this. Now, is this flagging, or are we actually going to see some kind of stock market crash? There's two things that we're going to talk about as far as the price action, but right now I just wanted to talk about those two things to become a better trader, right? So those two things to become a better trader are going to be risk management and adaptability. If you are someone who is willing to look at both sides of the coin, say, hey, this could go up, this could go down, and here's how it would go down, and here's how it would go up, it will make you a better trader on the adaptability side. And if you're someone who is very risk managed, it will keep you from losing big amounts of money, and you will always be in the right trade because you'll be flipping the script every single time. So if you put those two things together, you will be better than 90% of people in this market. And the big thing about that too is in order to do those things, if you do those things, those are great. And then on top of that, you need some kind of knowledge. You need the skill in a bear market. Bear markets are much harder to trade, and therefore you need those skills. So I wanted to create something this weekend. Usually my course is $200. I wanted it for $150, and I'm giving that away. So 25% off on my course down in the description for this weekend only. But as we are possibly going into some kind of crash or bear market, it is a very, very, very useful course with some very useful tools, weekly ranges, all that kind of stuff. And you'll learn about the indicators and even get a bear market strategy that I personally use myself. Okay, so pay attention to that. But if you're new here, make sure to watch some of the content. Make sure you like this style. Not all trading styles are the same, so make sure you like this style. Make sure you like the information here, and then think about taking that course this weekend. Come back next week as we could see some dramatic price action. As volatility is very, very high now, we could see a blow off top, and we could see some kind of crash. So just in case that crash happens, you need to have some of that skill because that is a much harder market to trade in. But if you're able to be adaptable and be risk managed, you can save yourself a lot of money and be better than 90% of those traders. So an example of the ability to be risk managed at this point is, well, what if this comes up to here and I see some divergence up here and that crosses down? Well, this is very, very good, right? This means, hey, the momentum could shift downward, but just in case, I want to have my stops in place. So that is a big, big thing that not a lot of people do. They get too involved in the crash scenario. They get too involved and they don't pay attention to the actual signals. They don't have stops or anything like that. So even in this pullback here, it is a good example of risk management. If you were expecting some kind of crash around this area, which we very well could have with these signals, and we noticed this manipulation up because of how wonky the MACD looks down here, you wanted to have a stop at this high. If you do this simple thing, you will literally be better than 90% of people in the market because you are, one, saying to yourself, hey, I know that this could be the moment, but what if? What if we just bounce up? I want to make sure to get out of my position if that happens. I'm going to be one of those people who isn't getting too involved in one direction, too absorbed by a bearish or bullish stance. I am always going to be open to both scenarios and leaning one of the ways, but following the price action. That will make you better. And I know some people might be eye rolling, like, oh, people talk about risk management all the time. Well, it is very important. And the fact that most people eye roll at it and most people lose money in the market means you could be one of the people who do not eye roll at this statement. You literally could be one of those people who is open to both sides of the coin, and it will separate you with some risk management from 90% of the market. If you just can focus on those two things and then gain some skills, it will really help you out from getting too bearish, too bullish. Okay, you will always be in the right side of the trade because you'll always be flipping the script because you are adaptable. It is very, very big. And if you can get some skill behind that using that coupon code WATER in the link in the description for my course, you can save some money this weekend and come back next week with some big skills to figure out, hey, what are the signals going to show me around here? Where is my entry point if this is going to head higher? Now, what is my entry point if this is going to head lower? And that's what we're about to talk about right now. So I hope that a lot of people take this into consideration. You guys saw me live doing my risk management, and people were saying in the chat, we love to see smart trading. And that's the point. Do not eye roll at this statement. I know it is very simple, but usually the simplest answer is the right one. You would rather lose 12% 3 times and then make 150% like we did last week, instead of losing all of it because you got too bullish or bearish. Sorry for my little rant, but now that's over and we're going to get into some technical analysis for the SPY here. Now the SPY, one thing that you have to note here is a lot of people are talking bearish. I mean, the term crypto crash and stock market crash are trending right now on Twitter as far as earlier this morning. So this bar right here is that reason. Remember, we were looking for another confirmation bar. The only thing is, throughout this entire run, we've never gotten 2 closing bars below the 20 at the same, like one after the other. So we've never gotten a second confirmation bar. And right now we have one, right? We keep getting one and buying back up. We keep getting one and buying back up. We keep getting one. Do we buy back up as we do test the 50 and bottom Bollinger? So that's what I would pay attention to going on into next week. There are buyers who could step in at this point, and there really are only 2 options from here that I see going forward. This MACD crosses up and goes positive, and we get some kind of blow off top, and we see stocks head to higher levels that we haven't seen in a long time, or ever. And then the other option would be we are going to break down through this monthly expected move that is 506.53 to the downside, which you get over on Patreon for the individual stocks that we cover on this channel. And this MACD is going to start to go negative. The reason that that is actually okay, the reason that that makes a lot of sense here is when you look at the weekly for the SPY. If you look at the weekly for a SPY, it's a totally different story. There's no 50 there. You have some support in there, maybe with these bars, but overall you would say, hey, I just lost my 5 and now I might head towards the 20 on the weekly scale. So we could do something like this and then see that blow off top happen. If you are adaptable and you're open to this happening, even though I really believe that this is going to tear down pretty quickly, I am still open to us heading to higher levels. I'm still open to us coming down to here, getting outside of this range, and then seeing an upward move. Why? Because I know there's a 68% chance that we land up here. So if we do come outside of that, even going on into next week, pay attention for that to buy back up, because we could land back in this zone and we very well might get some kind of blow off top as we do get data, and we have to react to it because the Fed is reacting to the data as well. Quick note, we are going to get into these shorter time frames on YouTube here on Sunday, okay? So make sure you're subscribed, make sure you have those notifications on so you can join us on Sunday so we can give you weekly ranges and daily ranges for next week, right? We give them away every single night, and you can pay attention to that, and we even give them the daily ranges away on Friday for the individual stocks, and on Sunday you get them for the weekly ranges, okay? And they're very, very helpful. All right, so right now what we're seeing here, well, we look like we're just kind of consolidated. We're going sideways. This is no kind of crash at this point. The only thing you're doing on the weekly scale, I just wanted to show that first, we're losing the 5 here. So we could get that reaction down to the 20. Look where that 20 lines up for the Qs. So if we see some kind of that selling keep going, we actually could get a reaction down to the 20, and that would make total sense. That would be a solid pullback, and then we would get right towards that monthly expected move for the Qs, and we land up here 68% of the time. So if we start to get out of here, the percentages, the probabilities are telling you that we are going to see some kind of bounce into the end of April. Will that be a blow off top at that point? We have to pay attention to that, but all we have to do is follow the signals on our charts, okay? So as we go into the shorter time frames on Sunday, we'll really talk about how we can tell if that is going to be an up or down move in the shorter time frames. Now, looking at the daily scale, I just wanted to show you guys how sideways we are going. We're really just within a range here, and we're not able to see a breakdown or a break up. But if that breakdown does happen, we have a lot of support. We have a lot of support on the daily side here. So pay attention, because what if we pop down to this level down here and we see that support come in? What if we see that support come down here by this gap, which happens to be down here, and we see some buying back up? Being open to both scenarios is a good thing, and then just trading based on the signals you're seeing at this moment with the individual stocks, I would say is very, very good. Because if you break this level, we could just start to head down dramatically, and those other stocks are going to be going down pretty well. And a lot of them are still up in these areas and looking for some kind of bigger pullback or some kind of crash. So really pay attention to that going forward. We could see some kind of move down over the next week and then see that pop right back up. So pay attention, be adaptable, and have some risk management. If we're taking calls to the upside, what do? Well, we put a stop right here. 90% of traders really don't even use stops correctly. Okay, so if you get a stop down here and that and you buy at this area or buy it where it's at right now, and you're saying this is going to go up, and it suddenly goes like this, or maybe it suddenly goes like this, hey, guess what? You're out. You're not worried at all. You are saying, hey, it's okay. A loss of 5, 10%. The next trade will be the right one. Let me follow my signals again. Something to point out here on the daily scale, getting tight. So a break up or a break down looks like we are going to get either a blow off top to come up into this area and see stocks hit new all-time highs again, and maybe even test that monthly expected move to the upside. If we break down, I expect some kind of test of the monthly expected move to the downside, and we'll have to see if we're able to bounce from there. We'll have to see if that's going to be a lower high, right? And we're going to pay attention to the signals here. But if we start to see this curl up, excuse me, sorry, I had a frog in my throat. Why? Because what do we do when we like to head higher? We do this on shorter time frames live all the time. We beat down, right? We get this MACD to get close to the center line, and then we curl back up into positive territory. So if this daily is able to just curl up and go positive, you're most likely going to see some kind of blow off top. You're most likely going to see some kind of rapid up move as we have built liquidity for quite some time. Now, if that breaks to the downside, you're going to see this daily here go negative, which will cause a big move to the downside. And then we'll have to pay attention to signals here. Most likely, if we head down to these levels, I more would be leaning towards a lower high at that point, right? But I am open to the fact that it could make a new high. And being open to the fact that it could make a new high will be everyone is bearish here. Everyone will continue to be bearish here and calling dead cat bounce, but you're open to the fact that this could go higher. And that is huge. And that will really separate you from 90% of traders out there. On the daily scale, we did very, very well with Apple because we were risk managed, right? This is one that we were in, we were out. We had our stops going, we're out, and then we get right back in right before this move. Literally live, we were talking about, hey, if we break this little trend here, we actually can see a rapid move up. We have all these divergences on the shorter time frames. We'll talk about that on Sunday, so make sure you're subscribed. But maybe we want to see an upward move before earnings or something like that for Apple. Apple seeing a strong move. Now, you guys know that my take on this was we're going to get some kind of reaction up to this level, and then this is a sell-off zone. So I'll really be paying attention to the shorter time frames. If Apple backs off, can it go up? But what did we pay attention to that everyone was saying Apple looks weak, Apple looks weak, Apple looks weak? And I know this because I watched other YouTubers say Apple looks really weak. And I think I was literally the only one saying, hey, I'm going to buy Apple right here. So we actually were talking about this a lot live. We were talking about this trade a ton live, telling you the signals and showing you on the daily side even how this MACD has not curled over into negative territory. So that momentum is telling you it still wants to go up. It wants to bounce. It's not able to cross down, not confirming another big move down at this point. So most likely we're going to see a reaction up. We found the divergences in here, and we even said we're most likely heading to this zone. I took profit right at this high just in case. I made plenty of money. So in this move, overall, you guys know it was TLT, but we're just going to do it over here, right? TLT was my trade I was looking at. Hit my stop loss, I'm out. Hit my stop loss, I'm out. I said, nope, I'm not trading TLT anymore. I'm not going to be insane and do the same thing over and over and over again. Apple looks really good here. Let me take Apple because everyone is bearish on it. Boom, that thing reacts. We even said it would probably come up to 176, right? Come up into this zone. And that's exactly what happened. A lot of people were able to benefit from this. So congratulations and thank you if you are subscribed and you found this information helpful. But we're seeing some resistance come in right here. What happens when we hit this zone? Well, we gap down, we sell off through that zone, we come up to that zone, we see a little resistance, we sell off from that zone, and we sell off again. This zone is very important. We have used it as support a few times just above it right here, and we tried to use it as support here, but you notice as we break through it, that selling starts to continue. So this zone is very, very important for Apple, and that's why we're going to pay attention on Patreon to our weekly expected moves for next week, because if we make some kind of reaction down and then up by the end of the week, we could be seeing another upward push for Apple as it takes back the 50. But right now the 50 acting as resistance. So be very careful here, right? We're going to look at the shorter time frames on Sunday, and that's where we'll really be able to dictate. But I just wanted to show you guys how we're coming up into an area where that resistance can come in, and we can see that as a slightly lower high at this point. Now, Tesla was one as well. We found some good trade setups in here for a big push. We were able to make money on this move. We were able to make money on this move. But now we're coming up into a point. Remember, 30-minute divergences here for Tesla. The thing about Tesla, if it really wants to get a solid bounce, and why we could see a blow off top after we move a little bit downward, right? If we test that weekly 20 and things like that, we actually could pull down into an area of 154.78. I've been marking that off for a long time. I do think this is a solid base, so I'll pay attention to this as well. But I think 154.78 would be a pretty solid place to hold up. Now, this would be crossing down in negative territory at that point right before earnings, and then maybe some kind of pop comes with that. Remember, earnings is something that is a 50-50 flip. The technicals can be thrown out the window, but if you wanted to play this with these divergences, it would tell you the likelihood of a strong bounce is here. So if you want to play this, what do we have to do that separates us from 90% of traders out there? Be open to it going lower, and therefore setting up your risk management, setting up your stops. If you take that low, we get some kind of bounce right before earnings. Maybe we do something like this, and then we get a small bounce before earnings. Take that. This will be where you put that stop loss, right at 154.78 if we head down there. Okay, so just pay attention to that. But I just want to point out the divergence down here. We could cross over negative territory. That would bring us down lower, most likely 154.78, or try to hold up at these lows down here for some kind of triple bottom. Tesla on the shorter time frames, we're going into this on Sunday as well. Looking forward, Amazon, remember, this is the wonky one that's telling you, hey, the insiders are selling. Every single time we see an upward push above this white line here, this 166 level, we see upward push, selling, upward, selling, upward, selling, upward, selling. We're not getting an upward move structure, an upward move. We are not seeing consistency in the holding of this stock. We're actually seeing this seem to be, retailers buying, insiders selling, retailers buying, insiders selling, retailers buying, insiders selling. You can see the red bars throughout this with the green means some people are selling, some people are buying. Right now, the insiders are selling. Even Jeff Bezos himself has been selling Amazon like crazy for the last few months. We talked about that like a whole month ago. We were saying, yeah, Jeff Bezos is selling a lot of Amazon stock. So I would be very, very cautious going through to the next couple of months. And now we have to be cautious up here. Why? Because you have a divergence. You have divergence on the daily scale from this point up here and this point here. And the RSI has already confirmed that actually. Turning down like this, the RSI actually already confirming that a little. You just want that extra confirmation with the MACD up here. So that's what I would pay attention to. But you do have it on the MACD and RSI at the same time. So be very careful with Amazon. It looks like the downside is most likely the direction at this point. But will that just go down and then react, right? Will that go down? We see the SPY hit that weekly 20 and then we get some kind of reaction up. This would be a good pullback and everyone will be like, hey, this is bearish, it's going to crash, and that thing crosses back up. Positive territory, we see another positive move in Amazon, giving us a triple divergence. If you talk like this in your head, right, while you trade, if you really think about these things, it will make you a better trader because nothing will really surprise you. You're always going to have something else going on, right? You're always going to have that other side of the coin in mind, and therefore you're always going to have your risk managed, and you're always going to be able to flip the script and be adaptable. It will really help you and separate you from a lot of traders out there. Nvidia, this is something we're paying attention to, right? We told you that this was some kind of bounce coming right here. Why did we tell you some kind of bounce was going to come from here? Well, because last week we came outside of that weekly range right here. Okay, so when you come outside the weekly range early on in the week, you have a 68% chance for a bounce. That's exactly what we did, and we landed right in the middle. We landed pretty much in the middle of our range for the week. So the fact that we were looking at this live and we said, hey, the shorter time frames, 2-hour curls up, we could see a positive move. We're going to go through that on Sunday, but really this is just a good example of how powerful those weekly ranges can be, and you can get those down in the description on Patreon for $7 a month. Literally a cup of coffee a month will get you to get some extra skills, right? Get something, a tool to use to take profit, a tool to use to know what the probabilities are every single week. And right here, Nvidia was telling you the probability for a bounce here was higher than the probability of some kind of drop. And therefore, we start to hold up, we bounce, we get the middle of the range. Some people do it that way. And it's very, very cool. But the thing here is, if you did play some kind of bounce here, where would you put your stop, right? We're not saying this can't crash down. We're not saying that. We're not getting too bullish. We're just saying the probabilities are with us here. So I put a stop right at this low, and guess what? We bounce. That makes a lot of sense. Now we can see the blow off top if it's going to come, right? If we get some kind of downward move, maybe we get a double bottom, we actually test the 50 itself. We come down into this very important point here. 841.46, very important. If we start to close below there, fill this gap, we can start to do something like this, right? So that would be very, very bad. So what we want to do is see a quick reaction from down at these levels. Maybe we even get some kind of 2-hour divergence or something like that we're going to talk about possibly happening on Sunday, going on this week. So we could see that downward pressure continue, but you are holding up above both moving averages. So if this just crosses up in positive territory, we're going to see that blow off top, and you're going to see Nvidia go nuts. Another one that could pop off to the upside because we have a bunch of divergences down here we're going to talk about on Sunday. This one actually has the potential for a very, very strong bounce. So come back on Sunday because AMD is going to be one to pay attention to this coming week. As we are at bottom Bollinger, we could see a bounce from this level. Why? It's a very important level, right? We talked about it going down to this level. We talked about it weeks ago, it coming down to something like 162 because, well, that's where we would set up some kind of head and shoulders. So even though AMD is looking like it could get some kind of really significant bounce, switch that 2-hour trend around and start to go positive, we really have to pay attention here because if we get that bounce, I want you to notice we are deeper into negative territory. So that potential for us getting some kind of bounce that creates a lower high is a little bit higher at this point. That would set up a nice head and shoulders for yourself up in this area. So pay attention to AMD as far as Sunday goes because we're going to go into the technicals and then we'll have to set up those weekly ranges so we figure out, hey, what if AMD makes a slight move lower and then wicks out and comes higher? What if it tells us there's a 68% chance it's going to go higher in the next 4 days? That would really help us out with AMD. But if this crosses up, you're going to see positivity because you're still close to that center line. You're still close to positive territory. Maybe this wants to go up before earnings, and then we see a problem, right? And we get that left head and right shoulder. Not saying we can't crash further down. If we start to lose this point here, well, then you're looking like you're heading lower. You're heading down into this little zone here between 150, 120, and I would say 133.50. I think that area down there is very, very good for a bounce. And then if you head even lower, I would say this little zone right here is probably very important, which pretty much lies between 125.66 and 116.39. You're just noticing there's good liquidity in here. It matches up with a high a little bit up here. So some resistance came in there. Once we broke through it, we saw that strong move begin. So I'd really pay attention to those two areas to the downside. But for now, be open to both scenarios, be adaptable, and have those stops in. So if we see this start to base out, curl up on a 2-hour, curl up on those divergences, switch that trend around, you still want to have your stop in play. That will make you better than 90% of the people in the market. And if you see an upward move, you can just keep moving that stop up, moving that stop up. So now you're making money and you're not going to lose anything. Meta is one I wanted to talk about because this is actually a signal that momentum is dying. You actually got the confirmation of the downside here, and this is very, very steep. So Meta is actually the one that's kind of telling you, hey, the momentum to the upside is dead. If I start losing both these moving averages, it's going to get pretty ugly, especially if we lose 453.08. I think if that happens, well, this thing might be done. We might be heading towards this gap, which will get us closer to that 200 on the daily scale. So Meta up here, right? We're going to talk about the divergences, but it's a little bit similar to Amazon, right? So Meta, we talked about this a month ago. We talked about Jeff Bezos selling a bunch of Amazon, and we talked about Zuckerberg selling a bunch of Meta stock last month and this month. They're both selling a bunch. So what is happening throughout this move? Well, every time we see an upward move, we see selling. Every time we see an upward move, we see selling. This is not some kind of upward move structure, a little bit of profit taking, and then upward move, and then profit take. No, this is literally like selling, 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 no structure, just retail holding this up while the insiders continue to get rid of and collect their bags. You know what I'm saying? They keep just collecting. Right now, Meta telling you, hey, my momentum on the daily scale is dead, and I do not take any kind of calls when I see this. That's one of my rules on this channel I talk about. If I see a red bar on the histogram, especially with divergence, there's no way I'm buying anything of a call on Meta. There are other stocks I can pay attention to, but I just wanted to show you on the daily scale how you do have that divergence, and that actually confirmed, and look how steep it is on both the MACD and the RSI at the same time. You literally have the RSI that's about to cross the center line if we get some downward pressure. So a crash is definitely there, but being open to some kind of turnaround will make you a more tactical, a better trader than 90% of people out there. So even though we are open to some upside, the volatility here is starting to increase. And what did we tell you about all of this price action right in here before this big green bar? Well, what is this allowing to happen? It's allowing the 50 to get close to crossing that 200. That is a big crash signal. The MACD here is positive. The RSI is still positive, not even overbought at this point. So we really want to pay attention to that. Volatility can really start to increase. We're not necessarily oversold on anything as of right now. I mean, maybe some individual stocks, but we're seeing this start to break out. So everything we've talked about for the crash scenario has happened except for the 50 getting above the 200. We held above the 200 for some time, allowing the 50 to get close, but will that actually cross and be able to remain up there? That's what I'm wondering going forward, because right now we have all the signals. Green bar, strong green bar above the 200, breaking out of structure, breaking out of this flag. Now we're seeing that fade back down. Do we get some kind of bounce because of one thing? The volatility was up more than 10%. So that tells you that in the next 2 trading sessions, we do have an 85% chance for a green day in the SPY. So be very, very careful because we could get some kind of bounce going on next week that leads to volatility actually going higher if it remains above this 200. Not going to be good news. And if that just continues to pop off, well, we're going to see this 50 get above. And then if it holds up there, we're most likely in some kind of bear market or some kind of crash, or the crash in a form of a bear market like I think is going to happen. Other big thing about volatility is it comes in, we get a buy signal. I don't pay attention to that too much, right? I pay attention to my signals in the course. In the course, we talk about 3 to 5 reasons to take a trade. It is one of the best parts about the course because I literally tell you the things that you should be looking for before you take a trade. And if you have only 3 reasons, how much you should put in, how much you should put in. If you have 5 reasons, take a little bit bigger percent, that kind of thing. We talk about that in the course. And remember, 25% off for the next 25 people, and I'm pretty sure 7 or 8 people have already taken it. So make sure to go down in the link in the description and type the code WATER. I'm gonna change that in the description so you guys can see it. But WATER in the coupon code there to get 25% off. Come back next week with a new perspective on the market and some more skills, some more tools to make you a better trader. But right now, I just wanted to point out on the weekly for the VIX. Look at the moment. This week happened right as volatility starts to go positive. So volatility goes positive literally for like a moment, and boom, that thing skyrockets. If this thing on the weekly scale keeps going positive, sure, we can get that reaction down. But what if by the end of the week, this thing is taking off on the weekly, getting above its 200 on the weekly? That's what I would pay attention to going forward. And we're going to look at the shorter time frames for the VIX on Sunday as well. So make sure to subscribe and join us back here for Sunday's video. So the main takeaway here is there's a way to become a better trader, and it is very, very simple. Risk management and adaptability. If you're open to stocks going either way in a market like this, especially in a bear market, you will be a better trader, and then you'll just be able to flip the script every single time. It will really, really help you out, and that risk management will help you out in case something goes the wrong way. But also, if it's going the wrong way, you might already be flipping the script and going that way. Go in the direction of the stream, trading like water, which that coupon code WATER is out there for you for 25% off the course. Link down in the description. Really appreciate you guys watching. I would just be very cautious because it looks like we could either get a blow off top or we could get some kind of stock market crash, maybe in the form of a bear market. But we're always going to be here for you live every single morning throughout the week. So make sure to subscribe so you can join us live every single morning as we do talk about stocks throughout the entire morning every single day. So pay attention. Come back on Sunday. Let's get some info for some shorter time frames. Let's get those weekly ranges to you, and let's get those daily ranges for Monday because we're in for a wild time here in April. March we said was going to be very trappy. April looks like we very well might be creating that top. So let's pay attention, but thank you so much for watching. Really appreciate it. Make sure to get those links down in the description, Patreon, all that good stuff. But you guys are fantastic. You're always liking, subscribing, contributing to the channel. I really, really appreciate it. And I hope you guys just have a great, great weekend. And I'll see you guys on Sunday. Peace.